Hey, this is Matt from InvestiQuant. Today is Monday, December 7th, 2020. And Friday, we saw another push higher. We continue to see pushes higher here in this market as we trade up at all-time highs. And Friday's push higher triggered an overbought reading. And that overbought reading comes in the form of the 2-day RSI being above 95. So that is a short-term overbought reading in the RSI indicator. So I figured we would take a look at what has happened historically when you get that sort of overbought reading in a bull market followed by a gap down like we're currently trading at the time of this recording. So let me set this up and discover looking at all four instruments. The setup's going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Now for opening filters, we are currently trading down across the board. So I'm going to go ahead and use a gap down here from the opening filters. Then I'm going to go into the indicators section, and I'm going to say that the prior day closed with a 2-day RSI reading above 95. So I'm just going to grab that from the active today section over here. It's also the first option. I'm also going to say that it is in a bull market. So we can do that by defining the bull market as above a 10-day and above a 200-day simple moving average. That will complete the pattern. Now I can click view results. And here we go. These are the results of going long at 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you gap down following an overbought reading in a bull market. And I'm defining that overbought reading as the 2-day RSI being above 95. And you are above a 10 and 200-day simple moving average. So this is a fairly common occurrence, and historically it's got 228 samples in the S&P dating back to 2003. The NASDAQ, similar sample size there, 229. The Dow, 223. The Russell, the fewest samples of the group at 159. If we take a look at the win rates on these, S&P coming in at 61% of these closing above the opening print for that day. The NASDAQ, 63%. The Dow, 60%. And the Russell, 56%. So all four of these have at least favored the long side by a little bit, with Russell being the weakest at 56%, NASDAQ being the strongest at 63%. So all of those being favored. And if you look at average win to average loss, you'll notice the average loss is coming in larger on most of these. So for the S&P, the average loss is bigger than the average win. That is true for the NASDAQ. That is true for the Dow, and then the Russell is similar sized wins and losses historically. So historically speaking, this pattern has favored the long size, but when it's wrong, it has lost more than what it has made when it is right. So hopefully you found that helpful. Good luck today, and we'll see you next time.